The stock market has been a wild ride lately. We've seen a significant sell-off that has investors worried. It's a reminder that the market can change quickly. This downturn is a global phenomenon. International markets are also experiencing declines. It's a sign of broader economic concerns. The recent market volatility has many investors on edge. Uncertainty about the future is fueling this anxiety. We need to pay attention to these warning signs. Remember, market downturns are a normal part of the economic cycle. Don't panic. Keep a long-term perspective and stay informed. Major stock market indices are feeling the heat. The Dow Jones Industrial Average has taken a dip. The S&P 500 and the tech-heavy Nasdaq have also fallen. Tech companies in particular have been hit hard. Palantir, a data analytics firm, has seen its stock price drop. Nvidia, a chip maker, is also experiencing a decline. Tesla, the electric vehicle giant, hasn't been spared either. Despite its innovative products, Tesla's stock has taken a hit. This shows that even industry leaders aren't immune to market forces. These declines are a reminder that the market is constantly changing. What goes up must come down, at least temporarily. It's crucial to stay vigilant and adapt to changing market conditions. Hold on to your hats, folks, because Tesla just got one step closer to making robotaxis a reality. They've snagged a new permit for their self-driving cars. This is a major win for Elon Musk and his team. This permit allows Tesla to test its autonomous vehicles on public roads in a new location. It's a sign that regulators are becoming more confident in Tesla's technology. Of course, safety remains a top priority. The implications for Tesla's robotaxi ambitions are huge. Imagine hailing a driverless Tesla with a tap on your phone. It could revolutionize transportation as we know it. However, challenges remain. Competition in the autonomous vehicle space is fierce. Companies like Waymo and Cruise are also vying for market share. It's going to be an exciting race to watch. The financial sector is bracing for impact as Morgan Stanley announces layoffs. The investment banking giant is cutting jobs to streamline operations. This move comes as no surprise in the current economic climate. Morgan Stanley isn't alone in this downsizing trend. Other major banks, including Goldman Sachs and Citigroup, have also announced job cuts. It's a clear indication of the challenges facing the financial industry. These layoffs are partly due to a slowdown in deal-making. Rising interest rates and economic uncertainty have made companies hesitant to engage in mergers and acquisitions. This has impacted investment banks' revenue streams. The big question is whether these layoffs are a temporary measure or a sign of deeper problems in the financial sector. Only time will tell how these cuts will impact the industry's long-term health. Section 5. Unilever chills out. Ben & Jerry's activism. Get ready for some corporate drama. Unilever, the parent company of Ben & Jerry's, has removed the ice cream brand's CEO. This move comes after a series of public disagreements over social and political issues. Ben & Jerry's has a long history of social activism. From supporting LGBTQ+ rights to advocating for climate justice, the brand has never shied away from taking a stand. This has earned them both praise and criticism. However, Unilever seems to be drawing a line in the sand. The conglomerate likely wants to avoid potential controversies that could harm its global brand image. This decision highlights the tension between corporate interests and social activism. It remains to be seen how this leadership change will affect Ben & Jerry's brand identity and its commitment to social justice. Will they tone down their activism, or will they continue to speak truth to power? Stay tuned. Section 6. NVIDIA's AI chip power play. NVIDIA, the chip-making giant, is on a roll. They've just unveiled a new lineup of powerful AI chips. These chips are designed to power the next generation of artificial intelligence applications. But that's not all. NVIDIA is also joining forces with major players in different industries. They've announced strategic collaborations with General Motors and Yum Brands. Talk about power moves. The partnership with GM focuses on developing advanced driver assistance systems and autonomous driving technologies. With NVIDIA's AI chips, GM aims to enhance the safety and capabilities of its vehicles. Meanwhile, NVIDIA's collaboration with Yum Brands will revolutionize the fast food industry. They plan to use AI to improve drive-through experiences, optimize kitchen operations, and personalize customer interactions. These strategic alliances demonstrate the transformative potential of AI across various sectors. NVIDIA is positioning itself at the forefront of this AI revolution, and its future looks brighter than ever. Section 7. Investor anxiety on the rise. A look at market volatility. Listen up, investors, because things are getting a little bumpy out there. Market volatility is on the rise, and it's got folks feeling a bit anxious. But hey, that's the stock market for you, always keeping us on our toes. Volatility is a fancy way of saying that stock prices are fluctuating more than usual. It's like a roller coaster ride. Sometimes you're up, sometimes you're down, and sometimes you just want to close your eyes and hold on tight. There are a bunch of factors contributing to this current wave of volatility. We've got inflation fears, rising interest rates, geopolitical tensions, you name it. It's enough to make anyone's head spin. So, what does this mean for you, the average investor? Well, it's a good reminder that the market doesn't always go up. It's important to be prepared for some bumps along the road, and to have a solid investment strategy in place. Section 8, the Fed's Balancing Act, Inflation and Interest Rates. Let's talk about the Federal Reserve, aka the Fed, the big kahuna of the US economy. They've got a tough job right now, trying to tame inflation without completely derailing economic growth. Talk about walking a tightrope. Inflation is like that annoying friend who always eats all your snacks. It means that prices are going up, and your hard-earned money isn't going as far as it used to. Not cool. Inflation. Not cool. To combat inflation, the Fed has been raising interest rates. Think of interest rates as the cost of borrowing money. When rates go up, it becomes more expensive to buy a house, a car, or even that fancy new pair of shoes you've had your eye on. The Fed is hoping that by raising rates they can slow down spending and get inflation under control. But it's a delicate balancing act because if they raise rates too quickly, it could trigger a recession. Yikes! Section 9. Navigating the Market Maze. Tips for savvy investors. Hey there, fellow investors. Feeling a bit lost in the market maze? Don't worry, we've all been there. Investing can be a wild ride, but with a few savvy tips, you can navigate the ups and downs like a pro. First things first, diversification is your best friend. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes like stocks, bonds, and real estate. That way, if one area takes a hit, your entire portfolio won't go down in flames. Next up, don't try to time the market. Seriously, it's nearly impossible to consistently predict when the market will go up or down. Instead, focus on investing for the long haul. Rome wasn't built in a day, and neither is a successful investment portfolio. Last but not least, do your homework. Before you invest in anything, take the time to understand what you're buying. Research companies, read financial statements, and don't be afraid to ask questions. Remember, knowledge is power, especially when it comes to your money. Section 10. The road ahead. Market outlook and emerging trends. As we look ahead, the market outlook is a bit uncertain. It's like trying to predict the weather in a hurricane. Anything could happen. But hey, that's what makes investing so exciting, right? One thing's for sure. Innovation will continue to drive market growth. Keep an eye on emerging trends like artificial intelligence, renewable energy, and personalized medicine. These sectors have the potential to reshape industries and generate significant returns for investors. Another important factor to consider is the global economic landscape. From supply chain disruptions to geopolitical tensions, there are a lot of moving parts out there. Staying informed about global events and their potential impact on the market is crucial. Remember, the market is a marathon, not a sprint. Patience, discipline, and a well-thought-out strategy are your keys to success. So buckle up, enjoy the ride, and never stop learning. The world of investing is constantly evolving, and so should you.